On the morning of December 8, 2005, a new stock appeared on the Tokyo Stock Exchange. JCOM had 14,500 shares in existence. A few minutes after trading began, somebody offered to sell 610,000 of them. The price written on the order was 1 yen. The exchange had accepted an order to sell the company more than 40 times over. Every trader looking at the screen knew something was wrong. The only question was what would break first: the order, the brokerage behind it, or the market trying to process it. In a house outside Tokyo, a 27-year-old trader known online as BNF started buying. When the mess was finally settled, the brokerage would be down 40.7 billion yen. BNF would be up more than 2 billion. One reversed order had created one of the strangest trades in market history. JCOM was not collapsing. It was a staffing company making its stock market debut that morning, and its shares opened at 672,000 yen. At Mizuho Securities, the intended order was simple: sell one share for 610,000 yen. But the quantity and price were entered the wrong way around. Instead of one share at 610,000 yen, the order became 610,000 shares at 1 yen. Here's the detail most retellings get wrong. Nobody actually bought JCOM for 1 yen. A sell limit of 1 yen means the seller will accept 1 yen or anything higher. The order crashed into the best real bids already in the market, and Tokyo's daily price limit stopped the stock at 572,000 yen. This was not a $5,000 share being handed out for a penny. It was a $5,000 share being dumped by a brokerage that appeared to have lost control of its own order. Mizuho noticed the mistake within 85 seconds and tried to cancel it 4 times. 4 times, the exchange's computer rejected the cancellation. The system had accepted a sell order for more shares than could exist, then refused the command meant to stop it. The cancel button had become decoration on a mistake worth hundreds of millions of dollars. A human error had collided with a software error, and the software error kept the human one alive. As JCOM hit its lower limit, traders began to understand the trap. Mizuho had promised to deliver shares it could not possibly own. Eventually, it would have to buy them back or compensate the buyers. The enormous seller on the screen was also a future forced buyer. That was the contradiction BNF recognized. His real name was Takashi Kotegawa. He traded from home and used BNF as his online name. By that morning, he had already spent roughly 5 years trading Japanese stocks and had built a fortune worth billions of yen. The legend is often told as if a random beginner found a 1 yen stock and became rich before lunch. That is not what happened. BNF had spent years studying violent sell-offs and the rebounds that sometimes follow them. JCOM was the most extreme version of a pattern he already understood. The company had released no disaster. Its business had not lost most of its value in 2 minutes. The selling was mechanical, and the seller was trapped. BNF bought 7,100 shares during the collapse, nearly half of all the shares JCOM had actually issued. This was not a $13,000 lottery ticket. The position required billions of yen. Years of trading had given him the experience to understand the situation and the capital to act on it. It still was not risk-free. The exchange could halt the stock. The trades could be canceled. A special settlement could be imposed. The same broken system that created the opportunity would decide what happened to his money. BNF was betting that the error had pushed the price far enough below whatever solution the exchange would eventually choose. Buyers flooded in. JCOM reversed from the lower limit of 572,000 yen and finished at the upper limit, 772,000. Contemporary reports say BNF sold 1,100 shares into that rebound and held the remaining 6,000. Then the market reached a problem no normal trade could solve. More than 700,000 JCOM shares had changed hands, even though only 14,500 existed. There were not enough shares on Earth to complete the settlement. The Tokyo Stock Exchange suspended trading and created an emergency cash settlement. It valued undeliverable shares at 912,000 yen each. BNF's remaining position was settled at that price. His reported profit from the full episode exceeded 2 billion yen, roughly $17 million at the time. The decision that made him a legend happened in minutes. The full profit did not. Part came from shares sold during the rebound. The rest arrived only after the exchange invented a way to settle an impossible market. Mizuho's final loss was far larger, 40.7 billion yen, about $344 million at the exchange rate reported at the time. Years later, a court ordered the Tokyo Stock Exchange to pay Mizuho 10.7 billion yen in damages because its system had failed to process the cancellation. The exchange also introduced stronger requirements for preventing enormous erroneous orders. Today, it can halt matching and, under extreme conditions, cancel executed trades. The real disaster was never just a typo. It was a chain, an input error, an order too large to be real, software that accepted it, a cancellation system that failed, and a market that kept trading until normal settlement became mathematically impossible. So, was BNF the greatest of all time? For those minutes, he was certainly one of the fastest people in the room. But the useful lesson is not to buy every stock that crashes. A falling price can mean a company is genuinely broken. In JCOM, the company had not broken. The machinery around its stock had. BNF's edge was recognizing the difference. He also did not turn $13,000 into $17 million that morning. The smaller number belongs to the reported beginning of his career. The legendary trade came after years of screen time, thousands of decisions, and a huge existing bankroll. The Typo created the opportunity. Preparation decided who could use it. Every trader saw the same 610,000 shares. BNF had no secret information, and he could not know exactly how the exchange would repair the damage. He understood one fact faster than almost everyone else. Somebody had sold something that did not exist, and eventually, that promise would have to be paid for. One person reversed the quantity and the price. One system refused to reverse the order. And one trader understood what those numbers really meant. That difference was worth more than 2 billion yen.